All right, guys, today you are in for a treat because I had the opportunity to interview Bill Noble, who's a Wall Street veteran and has some crazy stories to share from his time on Wall Street. But also, he came into crypto like 6, 7 years ago, and he has some really, really fascinating insights about Bitcoin and the crypto space, like predictions about where price is headed, of course, but then also things like what BlackRock is doing to control our space and why we shouldn't be so happy to welcome entities like BlackRock in. And yeah, it's going to be super juicy, so sit back, relax, and enjoy. All right, everyone. Today I'm here with Bill Noble. Really excited to have this conversation with him and ask him a bunch of questions about his stories and insights. So, Bill, can we start off by getting a really quick overview by you?
Sure. I'm Bill Noble. I've been in markets since 1991. 20 years in legacy, 25 years in legacy, including 12 years at Goldman, and the last 5 in crypto. Started in 2018 with Charlie Shrem, moved over to another crypto firm, and when I was 50 years old, someone put me on YouTube, and I became this niche where I could bring a legacy background and connect it with crypto to try to provide, solid crypto insights.
That's amazing. It's not often that we get to ask questions and hear stories from the golden era of Wall Street and all the crazy stuff that happened back then. So there's a lot of stuff I want to ask you, but I really want to start with your Wall Street years. Can you tell us some of the craziest and best stories that you had during that time? Some of your best moments or just whatever you want to share from then.
The best moment is sometimes where I started, right? In other words, I came from like a public school, not an Ivy League school, and it was a big deal that I got 1 of 2 spots on JP Morgan's currency desk as an intern. And, it's the summer. That's when they have summer interns, and it was August, and the assistant Swiss franc trader was going on vacation. So, they were like, let the kid sit on the trading desk. Let the kid do it. It's August, right? So I'm sitting there, and, in August of 1990, one day, I think it was August 3rd, it came across my screen, Iraq invades Kuwait, right? And this, oil doubled instantly, went from 30 to 60.
Wow.
You had market volatility, that nobody had seen since 87, and I certainly hadn't seen it. And JP Morgan was the biggest, if not the second biggest, currency desk in New York. Now, back then, there was no internet. There were no PCs. So everything was traded by phone. You bought and sold with other dealers and other market makers like OTC desks now, except you would call them on the phone. I operated this revolutionary new system that used text. But anyway, the volatility was so extreme that we had to keep track of the positions, whether you were long or short, by hand. And it was so stressful, I lost manual dexterity. I couldn't operate the calculator. I couldn't keep the position. This guy was yelling at me. He threw the position pad at me because, again, no Excel, right? So when that calmed down, I was like, how does anybody make trading decisions in a situation like this? And I went and I found the technical analyst because, back then, TA in crypto was everywhere. But back then, TA was considered taboo. It was like reading the tea leaves. Like they had to stick the technical analyst in the currency department. Couldn't have him in equities because that stuff didn't work, right? It's voodoo.
Interesting.
Right. So I went to him and I was like, hey, man, I bet everybody comes to you looking for help. And actually, he said, actually, no one does. So this guy gave me John Murphy's chart book, took me out to lunch, showed me how to do this, and I never looked back, right? If you fast forward, 15 years, he was the technical analyst for Morgan Stanley, and I was the guy doing it for Goldman, right? So in my introduction to technical analysis was, a baptism by fire. And then, probably story number 2, there's a lot of stories, but Story number 2 was 2008.
Okay.
Right, where it's another, I became like an extreme volatility specialist in legacy, which of course helped me move over to crypto. In 2008, even though Goldman knew something was going to happen, right, and they had protected themselves a long time ago, once that thing accelerated, it became so radical that really the entire research mechanism kind of shut down.
Wow.
And the only person who could produce anything was the guy who was doing tactical TA, which was me. So a proprietary trader at Goldman said that volatility was so extreme, I kind of was research for that particular bank for a month. He said he would stare at his screen in his email inbox waiting for my report to come in.
Interesting.
So it was all research shut down and legacy turned into some form of crypto. That's how extreme it was. It was also, that crash was on the charts before it happened. And, even though no one likes to think about it, every big mistake starts with denial. So if you blew off what you were looking at, it was something else. And then, I got other stories from back, just how funny and arcane it is now to come from a futures background where everything was done by hand signals.
Uh-huh.
Right. You'd have an order book on Coinbase so you could see all the bids on the offers. And, in Chicago, I'd be standing at a station looking at this mass of 3,000 people in this tiered arena, and the order book was somebody flashing me a signal it's 2 bid, offered at 3. 3 start trading, 3 bid, offered at 4.
Wow,
right?
That's
and
crazy.
I've
seen pictures, but hearing the stories is completely different.
Right, and the thing about that was the most stressful is when something would come out the unemployment number, because I was in the long bond pit, which was considered the biggest thing at the time. You had to get your signals right? If you were going to buy 100 contracts at 7, right? If you accidentally flipped it around this way, it would be sell.
Wow.
So you better get your hand signals right under stress. And sometimes you'd be operating with 2 phones trying to make hand signals to a guy who would see your signal and then turn around to an individual who faced inside the arena, right? So I would signal and then he would signal back to me, you bought 100 at 7 filled, right? And we would write this down on paper and then we would match his paper up. The people who did the, who carried the tickets around were always, attracted members of, the fairer sex. And it was kind of just a wild, it was a wild show. I mean, I went to work every day in all these jobs. I couldn't wait to go to work.
Nice. That sounds really exciting for sure. I really want to ask you more about TA though, because
right,
I'm not the most expert guy at TA, though I know a little bit about it. The first thing that I was wondering is what style of TA do you mainly do or focus on per se?
Okay, good question. So first off, there is no such thing as an expert in TA. If you hear some guy in a suit go, I'm an expert, be careful of that, right?
Uh-huh.
Sometimes you have to change, your TA structures and your TA things you use as markets changed, right? Now I use a lot of quantitative stuff like the work of Tom DeMark that's been around forever, where you can find reversals.
Mm-hmm.
I use Lux Algo and Bill Williams. Those are 2 quantitative systems that help you with momentum.
Mm-hmm.
All right. And then, I have stuff that I use from William Gann, who kept charts by hand. That's how I learned crypto, by charting it by hand. He does stuff with planetary movements, like there's something really big going on right now.
Yeah.
I use, that's the most arcane stuff. But, if you take a chart and you look at it and you look to the left and you say, where did the market start and where did the market stop? All these things that people do that are fancy, that's really what it comes down to. So I like the basics.
Okay.
Crypto has some very unique things, like things that work in legacy work the opposite in crypto frequently. Right. And crypto has a bull market and bear market. You have to, Technical analysis is about understanding what is the nature of the price action. What is the market telling you? And as Bill Williams used to say, to get good at it, it's like you have to want what the market wants. It's a philosophical thing as well as a mathematical thing. That sometimes gets lost.
Are there any strong opinions you have about TAs? Like maybe certain people or certain schools of TA you think are worse than others or things like that? At least when it comes to crypto, because we see people use all sorts of different kind of methods or schools or whatever you want to call it.
Right. Okay. Well, there are a lot of opinions on crypto Twitter. So the TA on crypto Twitter in general creates a lot of noise. Like I like to narrow down what I'm looking at and stick to my work. A lot of people are, they get easily influenced. So that's one thing I would recommend not doing. Like stick to your work, right? In terms of, I have a lot of respect for the Elliott Wave guys, right? I mean, I know some of that, and I use the quantitative systems to help me with that. It's incredibly powerful. The guy that taught me, I mean, he sits around in like a beach house and advises the biggest hedge funds in the world, like literally. So guys who know that stuff, it's like Bruce Lee in martial arts. Now, believe it or not, the stuff that I don't know that I'm not crazy about is on-chain data. Like I've used, I've used things like Glassnode. They have a lot of cool stuff. They have a lot of cool charts, and I'm sure those guys might say the same thing about what I do. But it feels like it's tough to dig out what actually means something in on-chain data. I'm sure if you studied it for years, you would figure it out. But as a TA tool, even though they present a lot of cool charts, that's tough to figure out. It's tough to figure out like what's important.
I agree.
Because when it moves fast, that's what matters, right? Is can you get people the information that they need to make decisions? Like that was my job at Goldman. Like I wasn't the captain of the ship. I was the sonar operator. And that's what I do on YouTube, right? Your job is to tell people how to steer their own ship.
Right. I definitely agree with you about the on-chain stuff. I used to be a lot higher on it per se, but I realized that a lot of the data there can be interpreted in two different ways. And it just, like, a lot of people were like, this means that it has to go up or something, and just history would prove them wrong, essentially. So, I mean, it's not that they need to have a 100% hit rate, but it's just like it makes logical sense, but there's like other explanations or other factors that they're likely missing, and they're just like focusing on one thing to try to be predictive, to have predictive power, and that's never really the case, or would make markets way too easy per se.
Right. And it's funny you mentioned hit rate. I'm sorry, go ahead.
No, go ahead.
No, I mean, when you talk about hit rate, right? Now, in Legacy, and this comes directly from the top trader I used to work with, it's like in Legacy, you're a genius if you have a 60% hit rate. Right? In other words, you keep the losers small and the winners big. But the expectation in crypto, the expectation in crypto is that you're a Swami and that you're 85% accurate. Right? And people expect that kind of work, basically for free. So the expectation in crypto, the bar is actually higher.
Yeah.
It really is.
That makes sense. Okay, so I have a lot of really interesting stuff I want to ask you, but I actually want to jump around right now because before we had this, we planned out this interview, you already told me you were predicting new highs, and they ended up coming before we were able even to record this. Right. So given that Bitcoin has already smashed past its previous all-time highs within the past few weeks of us chatting and setting this up, what do you think is next, and what are your charts and just your overall view? Like, what are you forecasting here?
Okay. So, yeah, good question, right? I mean, if we had done this before, the podcast would have had a life of 2 weeks. Now we can almost do the 2025 preview. So I think when it goes through 100, it's going to go through with gusto, right?
Okay.
It's not going to just, when it goes through 100, it'll probably go to like 105 at a tactical level. That's just because the Bitcoin ETF is here, and they see Bitcoin at like, $48 a share.
Yeah.
They just want to own it because it's moving like Nvidia. So it's probably 105 short term and then 125, in Q1 of next year. Because, after all, Bitcoin is now bigger than the Saudi oil company.
Exactly.
So, and I also think, BlackRock and the Bitcoin options market, they can use it eventually to slow it down. And the reason that they would slow it down is so big players can buy, these ranges that we have. So that's the first thing. And then I think the second big thing is the meme coin super cycle, right? I think the meme coin super cycle is going to top in 2024 when Coinbase just indiscriminately lists all these memes, and it's essentially whale distribution to retail, right? And, memes are great. Normally low quality stuff will lead a bull market. So memes have been incredible. So that means you're going to have an incredible bull market. But this super cycle is probably going to like top out and normalize. And here's the reason, right? So the hot take is this. Web3, the current administration, the next administration rather, is going to want Web3 made in America.
Yes.
Like he wants to export Web3 in every way possible. He wants everybody involved, Wall Street, Silicon Valley. And I think because the head of Cardano is one of his advisors, he's going to come out and make a speech about crypto and Web3. And it's going to be the equivalent of what Kennedy said in the 60s about the moon landing. Like the government, Kennedy was like, we're going to the moon. The Russians are ahead of us, but we're going to the moon. And guess what? They put the full force of the government behind it, right? And, when the U.S. government wants to get something done, like when it's, this very powerful mandate, he's going to come out and make a space program speech about crypto and Web3 for a couple reasons. One, they got $36 trillion in debt, and this could be a huge explosive growth industry, right? So doing a strategic reserve, buying Bitcoin, putting money in the pockets of crypto bros so they can have a house and a car, right? And then, if he turns the United States into a giant incubator for crypto, effectively building a parallel internet and financial system, I mean, do you realize as we're recording this, they're discarding all of Web3 as we talk in favor of memes? And I always say, in the beginning, people always do the wrong trade. The first trade is always the wrong one. Now we're doing Bitcoin and memes. And Bitcoin is fine, but the whole rest of the market is just, it's like ripe for the taking.
Right.
Right. And
I agree.
When normies see this stuff start moving, because now normies are on Coinbase, right? Coinbase went to the number one in the App Store today. So every normie is now looking at his phone going, oh, wow, look at this, right? So when they see something moving, they're going to jump on it.
Yeah.
And when they make the space program speech is something I worked on with my partner, Toby Ward. She's like, listen, man, he's going to go full Kennedy on this.
Dang. That's crazy.
If that occurs, like Web3 and DeFi were things in real world assets, because remember, BlackRock's still there, right? That whole thing is coming. And if you have problems with the dollar or with debt, the ability to access the financial system on chain, right, versus having to go through a bank, that's why BlackRock wants it. And if BlackRock wants it, they're going to get it. And the administration wants it, they're going to get it. And, this could be so big, it could be everything that everybody dreamed about. And it's so ironic. It's like, well, I'm going to do Solana because it's just meme coins. Well, dude, you're going to do Solana because it's a phone company, and this is just going to like mushroom out,
Yeah.
I would call it a huge fundamental shift, right? And then I think that's the value that a guy like me would bring, because I got enough gray hair to see other fundamental shifts and know what it meant. Like, I saw the start of the internet. You know what I'm saying?
Yeah.
The .com trade, things like that. So we're in a fundamental revaluation of the whole crypto ecosystem.
I definitely agree, and I'm really glad that you're also bearish on meme coins and the meme coin super cycle, because I am too. And I outlined why in previous content that I created, but I think you're absolutely right. And one thing is that with a friendly administration coming in, all the things that projects could do before, that projects didn't do before, can now be done. For example,
Right.
things like the fee switch, right? Like dividend tokens now, we can hold like Uniswap's token potentially or some other DEX and get passive income or dividends through that from the trading fee volume. That makes it so much better. I'd rather own that than some random meme coin that could get forsaken for some new hottest flavor of the month. So I
Right.
definitely agree with you
Right.
there. But I want to get back to it though, because we went on a little bit of a tangent. You said 125K for Bitcoin. Can you kind of flesh out the rest of your forecast, or like how high do you think it goes? Like what timing are you predicting, or anything on your mind in that area?
Okay, so I think starting with 125K next year is a good place to go in March.
Okay.
I think, Bitcoin is probably going to go lower. Like next year, you're going to have extraordinary volatility. Like
Okay.
in this case, you're going to be begging for that range between, 50 and 63, because next year you're going to have, you could have something where it goes up to 200 and then comes back down to 80 because you have a stock market disturbance. That's an example.
Okay.
I think when I look at the forecast, believe it or not, I don't drive it off Bitcoin. Like the Bitcoin ETF could go from 50 to 100, which that's like 200 or 300K Bitcoin. So 100 for the Bitcoin ETF, but really I'm kind of driving it around where ETH could go. ETH could go to 6K or 10K sooner rather than later. And Solana 1000, has not been talked about. That's probably later next year. But the Ethereum comeback, especially if you look at how that's traded versus Bitcoin lately, ETH 10K, ETH statistically does very well when gold, silver go up and the dollar goes down. And
Okay.
when it comes to like, I don't have a number for Bitcoin other than that number, the numbers from the ETF, like 50 and 100. All right. But, ETH could be a massive beneficiary of both, Web3 and the currency crisis. So it's like layer ones and cross chain to the moon. Like total altcoin market cap, total crypto market cap without Bitcoin should be 3 trillion.
Wow.
Bitcoin should also be 3 trillion. Now, I didn't do the math, but I'm thinking about it in market cap terms. In other words, having the whole thing worth
6 trillion
six or
total?
six or 7 trillion total kind of makes sense, right? I mean, what's the market cap of the Magnificent Seven, right? The top 7 stocks in the U.S. is like, I don't know, what is that, like 13 trillion?
Yeah, something like that.
Yeah, you've got multiple $3 trillion companies in there. So they're like, well, Bitcoin just surpassed the market cap of silver. It's like, hey, man, talk to me when Bitcoin surpasses the market cap of Amazon,
Right.
right? Because, if we're headed for a world where you need hard assets, which you are, in other words, part of our thesis as a group is like, get your cash out of the bank. Get it invested in something. Go buy a computer because of tariffs. Go buy Bitcoin. Go buy Ethereum. Go buy gold coins. Whatever, right? So that's how I'm doing the forecast right now.
That makes sense. So you kind of mentioned this very, very briefly, but you mentioned something could happen to the dollar in the
Right.
coming like year or so. Can you talk a little bit more about that? Because I'm no macro expert, but I know that when the dollar makes big moves, it also affects like pretty much the entire market and all risk assets definitely. So what do you think is going to happen there and why?
Okay. So in an economics textbook, where you would see countries that have printed money, like historically, that's mainly in Latin America, is that, the only way out of a debt crisis is to like devalue the currency.
Okay.
Effectively, that's just how it works. You borrow too much money, your currency drops. Okay. In this case, the prior administration and even the two administrations before that, interest on the debt is now $1 trillion. And it's almost bigger than the defense budget. So when you have that kind of a problem, and then they're going to do all kinds of experiments with taxes and tariffs, that could go bad. I mean, you can like or not like the people in charge. Right now we're having a big patriotic dollar rally, but if no one wants to buy our bonds, or people start to lose confidence for whatever reason, or maybe they cut government spending so much it triggers a recession. Like, we're on like Department of Government Efficiency meme day. Twitter accounts open when we have this conversation. But like what happens to every like local bank that lent money for real estate in Virginia and Maryland if you cut $2 trillion out overnight? You know what I'm saying? So, a dramatic drop in the dollar, you could have inflation come back, and people could there could be a confidence crisis. Equities could, this is later in the year, right? Equities could give out, right? And I don't think all this printing money has got to stop, right? And that can create a disturbance that can affect the dollar, right? Like the gold market in the fourth quarter of this year, when it was rallying, when Bitcoin was sitting still, is effectively telling you what's going to happen to the dollar. Now, all that said, in crypto, when you say the dollar is going down, everyone thinks it's going to zero and a loaf of bread is going to be $25. Not true. Okay. There have been two big dollar declines, and this is going to be the trifecta, right?
Okay.
1985, the G7 governments got together and they said, the dollar's too strong. We're issuing a statement that we want the foreign exchange market to take the dollar down, and we're not going to stop them. So it's licensed to just sell. Okay. Take the dollar lower. Governments had that much power. All they had to do was say it, and the market would do it. This is how George Soros made all of his money.
Interesting.
Right. Selling dollar yen back at the time. Because he understood, as he would say, that it was a massive fundamental shift. Now, there was another dollar decline after the dot-com bust. And what people don't realize that when the dollar goes down, it's kind of like stimulative for American manufacturing. Like our goods get cheaper abroad. And it encourages people to take the dollar out of a bank account, out of an account at the Fed, and invest it somewhere. Right. When everyone holds on to the dollar, it's negative for risky assets. So, whether they like it or not, I mean, the first thing J.D. Vance said when he got nominated vice president is we want the dollar lower. And then Trump's economic advisor, who was a guy older than me, who was on Soros's original hedge fund team, backed off of that and is like, whoa. It's because the foreign exchange market is like the crypto of legacy in terms of how it moves. Mm-hmm. So, when the dollar starts to go down, it's going to continue to go down. Right now, you're having a gigantic patriotic rally in Q4, right? It's like, oh, wow, the dollar is going up. This is great. And currencies can trade like that. But when all the shorts are stopped out, people are going to be like, wait a minute. And there's a reason why BlackRock wanted the Bitcoin ETF, right? There's a reason. They didn't get $25 billion invested in that for their clients or, people at large just because they think it's cool, right? They did it because they know there's a problem with the currency. So does Tudor Jones and all these old school hedge fund managers. They're back for one more final round of currency chaos. Right?
Interesting.
I got my book out, Currency Wars, by a former Fed governor. It's not my book. It's written by a former Fed governor, but it's fictitious, about the enemies of America doing something to like undermine the dollar. So, I don't know if that's going to happen, but something is.
So if the dollar is going to get so weak and drop so much eventually, are you saying that that's going to be favorable to risk assets like crypto?
Yeah.
Or is the correlation going to be different?
No, I think it's all about hard assets and crypto. Electricity for AI, copper for electricity for AI, gold, silver, crypto, right? Crypto especially because it has that, utility as Web3 and money, right? I mean, it's simple. Dollar down, Ethereum up. Dollar down, crypto up. Period.
Interesting. As simple as that. Okay.
As foreign exchange is a teeter-totter, right? It's like dollar down, Bitcoin up.
But do you think we're going to have, you said right now is kind of like a honeymoon period, or I guess that's for the dollar strength, but in general, do you think there's any like adverse macroeconomic event that's on the horizon that may cause a big crash beforehand?
Well, I mean, nobody's going to want our bonds, right? I mean, if we're eliminating income tax and moving the tariffs, you're going to have prices go up, right? Because you're going to still pay the taxes. You're just going to pay them at the counter at Best Buy, right? That could affect consumption. That can affect growth. That can affect equities, but it's really going to affect our bonds. I mean, one of the biggest hedge fund managers, Stan Druckenmiller, who has never had a down year, never. He came out of the original Soros group. He has a monster bet short treasury bonds. So he expects a rise in long-term interest rates and, frankly, our bonds to collapse. Now, I am sick and tired of these crusty, old, bearish hedge fund guys, right? I think the trade is to moon crypto.
Okay.
But there is going to be a return of inflation. There is going to be a problem with our debt. There is going to be a problem with our currency. And there's eventually going to be a problem with our stock market, which, again, is why people are indiscriminately FOMOing into the Bitcoin ETF as we speak. Like, it's Bitcoin, Ethereum. Grayscale has a whole list. As soon as we're done here, I'm going to get the whole list of, because Grayscale's created a bunch of
exactly.
It's like, the FOMO into that stuff is going to be epic. And
interesting.
That is, even if equities go down or there's some kind of dramatic event, that stuff's not going to come back, but crypto will, with a vengeance, I might add. Right.
Interesting. That's very contrarian. I would expect both to kind of roughly track each other.
Well, they may track each other at first, but the recovery in crypto will be dramatic. Right. It'll be dramatic. In other words, once everyone goes, wow, this is Satoshi's vision, it'll just be gone. Because, again, who's the seller? Who's selling Bitcoin? If you want to buy a huge amount of Bitcoin, you're going to have to take over a company. You're going to have to take over a mining company. So I noticed no one's ever heard this term, M&A. Mergers and acquisitions in crypto by the end of next year is going to be huge.
Interesting. So you mentioned a lot about BlackRock's interest and involvement into crypto. I want to ask you about that because a lot of people are excited about it. They're like, BlackRock is going to help moon our bags. Right. But what do you think are the risks involved that people may not be thinking about? And what do you think their long-term goal here is by stepping foot and getting involved in the crypto space?
Right. The long-term goal of any company like BlackRock or Goldman, when they enter something, they want to totally dominate. Like, a guy like Larry Fink doesn't climb to the ladder of a company like that for no reason. So when they get into something, they want to dominate. So the one-stop shop for all things crypto, they want to be BlackRock. And BlackRock wants to effectively control how you get Bitcoin. So if you want to get the Bitcoin ETF or you want to get Bitcoin, you'll have to go to BlackRock. They may do things to the Bitcoin market using options. Gensler kind of approved that very quietly. They can hold Bitcoin down long enough for people to try to get long or take over a company. And then they can actually control the ebb and flow at some point when they're big enough.
Interesting.
They can suppress it if they have to, if someone has to buy, or, who knows, one day Uncle Sugar maybe call them up and be like, dude, you guys got to hold this down. It's humiliating us. I mean, right now it's like, oh, Cynthia Loomis with laser eyes is a strategic asset until the dollar starts going lower, right? BlackRock could also fork the code, right? I mean, Jamie Dimon has brought this up. I mean, Bitcoin's got 5 lines in it. BlackRock could make BlackRock Bitcoin in theory, right? I don't know if that's their objective, but they just want to dominate access to Bitcoin through legacy. That's
interesting.
Right. And they would also dominate Bitcoin, which, if there's an effect, okay, Bitcoin is Bitcoin and we're in like Bitcoin mania as we're talking, but this just gives the ecosystem an incentive to develop other forms of money. Right. Or moon current forms of money like boomer coins like XRP and Bitcoin Cash that everybody gave up on. Right. So as legacy goes one direction, crypto can be like, well, now that we're free to move about the cabin, because Elon Musk said, you are now free to build. Like as soon as he said that, I was like, oh my God, this market is going to the moon. DeFi exploded as soon as he said that.
Right.
So the market's free to innovate. Other forms of money, other payment systems. It's like, there's kind of no limit.
So do you think people are too quick to celebrate BlackRock's involvement? Because, a lot of people just care about pumping their bags, right? And so they see this as A causes B, which is bag pump.
Right.
But do you think, I know some more like OG Bitcoiners who are more like just the old school libertarians and like punks per se, or whatever you want to call it.
Yeah.
Like they're like, well, what happened to all the self-custody and like permissionless finance and things like that? Now you're just getting your Bitcoin through a centralized entity, BlackRock. So what are your thoughts on that whole kind of complaint per se?
Right.
Or warning, rather.
Right. So, okay. So crypto bros thinking that BlackRock is here to pump your bags is essentially your classic pea-brained crypto Twitter stuff. That is absolutely not true. Like BlackRock is there, to dominate. Now, there is a positive side to that in the sense that, the cyberpunks want they want all these things. They want self-custody, but they never developed anything. Snowden will tell you this. They never developed a privacy layer on Bitcoin. They didn't do the development that you would have needed to do to make Bitcoin something, the super rebellious cyber coin, That's not true. Now, what BlackRock can do, because, again, BlackRock is, they're not the nicest people in the world. Somebody has to issue bonds denominated in Bitcoin. Like, I personally think Michael Saylor and the guy from Ecuador should be doing this. Or El Salvador, excuse me.
Right.
Right. They should be issuing bonds in Bitcoin that the market can trade so you can have a Bitcoin interest rate. Like one guy joked that DeFi doesn't exist because it hasn't been built on Bitcoin. Okay, well, you know what? Now would be a good time. Right? You need a Bitcoin interest rate. For Bitcoin to be money, it's got to have an interest rate. It's got to have bond. It's got to have a bond market. And, if there's a problem with treasuries, one day, MicroStrategy debt based in Bitcoin is something that I think we got to have. We need a Bitcoin yield curve.
Interesting.
And as far as your bags go, look, man, the crypto market is free to innovate. If institutions want Bitcoin and governments want Bitcoin, we'll innovate something else because that's what they want.
Exactly. So I'm glad you brought up MicroStrategy because that's what was on my mind that I want to ask you about.
Right.
Michael Saylor has been called a pioneer for taking big bets when no one else was taking these kind of bets. And now MicroStrategy is at all-time highs after the crazy .com bubble rocket ship.
Right.
But he keeps like borrowing more and then buying Bitcoin with it. I know that's a really simplistic view of it or description of it.
Right.
But do you think he's just like a genius for this essentially, or are you worried about his strategy as a whole?
Okay, so interesting point. Dating myself, the first paper that I had to write in business school back in 2000 was about how MicroStrategy got in hot water over some creative accounting. Right. I mean, the paper we were instructed to write was about how the media was wrong. What they did really wasn't that bad. But Saylor took a lot of heat for that, and that stock in that company was basically dead for, like 20 years. So you got to think about that. This guy sat around for 20 years thinking about the comeback. That's point number one.
Yeah.
Right. Point number two is, this guy was indiscriminately buying Bitcoin in 2021. Like there was a month where his average price was like 60. I think his average price at one point was like 48 for 2021. Right. So think about this dude. After FTX, this guy went to work every day, did podcasts every day, sat there and looked at his bags down 50%. He watched Bitcoin sit below 20K for 6 months.
He did not care. He did not flinch.
Right. But he did not flinch, but that could not have been a comfortable situation because the people running the software company, the employees are like, hey, bro, what are you doing? Right. Not a comfortable thing to have to look at. So he survived that. So he survived. He plotted a comeback for 20 years. He took 6 months of the worst heat probably in the history of crypto. And he's going to back off now? No, he's not going to back off now. He's just going to press the initiative. I mean, he thinks it's worth $1 million. Bitcoin is probably going to be universal basic income. If you have $10,000 worth of Bitcoin, you're set. If you have a SAT 5 years from now, when everything is run by, robots and AI, that SAT may sustain you. And, he says everything but that, but his opinions and his vision are compelling. And, one of the worst things that you can do as a trader is have a view and not implement it and make money. So if you're a Wall Street trader, right, like Saylor is, like he's basically a hedge fund. The biggest mistake is not thinking it's going to go up and then it goes down. That happens to everybody. The biggest mistake is having a view, having you be right about the view, but you didn't make, or you were too timid, or you didn't make the kind of money that you should have made. And Saylor's not going to make that mistake.
Interesting.
Right? He's not. I mean, he's just going to keep borrowing money, right? He's just going to keep doing it. He's going to buy the top, and then he'll wait for it to go down, and then he'll just buy more.
Is there anything unsustainable about his strategy that you see? Or not really?
Well, I mean, again, what doesn't make any sense is that he would just buy it and have it sit there. Hopefully, he's going to use the software company to innovate. Like, again, where's the privacy layer? Okay, where's the yield curve? Where's DeFi? Where's the connection to other chains? I mean, he's got to take some of his profits that he has and start like the way BlackRock was doing with RWA projects, right? He's got to get Bitcoin connected to the whole rest of crypto. Because I got news for you. When they make the Web3, we're going to the moon, space program speech, the risk is that he just sits there with Bitcoin and doesn't connect it to everything else, right? Bitcoin could create unlimited human freedom if somebody spends the money to connect it to everything else. I mean, right now it's just kind of like, it's like Vitalik is like an elf in Santa's workshop trying to make Ethereum work, right? He needs, we got to get off this. There is no second best. We got to get off of that. we got to look at Bitcoin as the rising tide that lifts all boats. And you need a yield curve, a financial system. It's like, what, a bank? What it's like, that's just arcane. Right? So, I mean, he's got to develop on it. He can't just sit on it, in my opinion.
That's a good point. That's a good point. Interesting. So I think you kind of touched on a few things that you're really excited about, but I want to ask you about the future again. Since you believe it's going to be like a renaissance per se, or like a moon program, what are you most excited about in terms of like trends or sectors that you think will boom the most? I know you think everything will, rising tide lifts all ships, but what do you think is going to really like be the star of the show?
Okay, so and again, this comes from my coworker. Bitcoin is going to decouple from equities, and altcoins are going to decouple from Bitcoin.
Okay.
So I mean, this isn't going to be like 2021 where everything goes up and everything goes down. It's already happening today as we're talking, right? So you're going to have sectors moving on their own. Now, in terms of what the big stuff is long term, you have to say towards the end of next year, real world assets is going to be coming online, like massively. Like I know that the big players that issue like stock ETFs, they want people to have Bitcoin and Ethereum in a wallet, and they want tokenized versions of their ETFs to be sitting in those wallets, right? They don't want you to buy the Bitcoin ETF. They want you to be crypto native and have their assets be in your wallet, which is what Gen Z is going to want to do. Franklin Templeton knows this. So this real world asset thing is going to be just enormous. And then, of course, in the short term, there's cross-chain, right? You can't have Ethereum, Cardano, Solana, Sui, Avalanche, Phantom, SEI, Aptos, right? I mean, there are all of these networks that are going to have to be connected by something, right? And whatever exists now for cross-chain between Bitcoin, Ethereum, and Solana, when that network gets expanded and these, like, believe it or not, new projects are going to start coming out, right? Right now, it's all new meme coins. When the space program speech gets made, we'll probably be buying projects with $1 billion valuation out of the gate.
Dang.
Because BlackRock will be injecting money. So the age of the, if you want to find a $20 million project, now would be a good time. Now would be a good time, because, when that narrative starts, I mean, you got to think about putting all of Wall Street, like real estate, housing, junk bonds, is artificial intelligence going to trade in the legacy markets, or are they going to trade like on chain? And there are even things like layer ones where, you're going to have to replicate how legacy is used to trading. They're used to trading with privacy. Privacy could be an enormous narrative just because everybody doesn't want whatever they're doing on the blockchain.
Yeah, that's true.
Right? I mean, you don't, when you go to Macy's and you pay with your Macy's card, they don't know what's in your bank account.
Exactly.
Whereas if you pay with a wallet in the metaverse, they're going to see everything. So, the you are free to build about the country is huge.
Dang, I see. I'm excited for that as a fellow, like, just enthusiast and builder as well in this space. Can't wait for that to come. I want to move on to retail investors, though, because both of our audiences are largely filled with retail investors, I believe. So you have a ton of experience in all sorts of markets and crypto as well for many years now. Can you give some advice to retail investors who may still be somewhat new and are just getting into crypto and want some advice on how to navigate this market in the next couple of years?
Sure. Okay, so the first thing a crypto investor will see is someone else making more money than them, and that will make them feel bad.
Yeah.
So, and I have this problem, Everyone says take your emotions out of it. Your emotions are never out of it.
For
Stan
sure.
Druckenmiller, the most famous guy in the whole world, will say, if I own something, every time it goes down, I feel like selling. Okay? So the first thing I tell retail investors is remember why you own it. Like, understand why you bought this. Right? So if you don't understand why you bought your Penguin coin, you need to recompute. Okay? Then there's the idea of buy breakouts from equities. Right? Like if you see something that's under the radar or it's just starting to move, don't be afraid of the first 15 or 20%. Don't. Especially if it's down 90% from its high. You know what I'm saying? Like, that was a big stock thing. I mean, the guy I worked for at Goldman, I mean, that's how he became a partner. Buy breakouts. Something breaks a trend line. Something breaks a prior high. Go with it. Find the momentum.
Yep.
Then there's also kind of an understanding that, sector rotation. Like in equities, people are used to like buy it and sit on it. I think the Bitcoin crowd is encouraging people. This happens to people all the time. They don't know when to sell. Now you could use like TA indicators. Like I use some of that stuff, but you're going to have to get used to what I call active portfolio management. Like you're going to have to, and this happens to stocks all the time. If you have a managed account or you have a financial advisor, you have to rebalance your portfolio like every month or every 3 months, right? Because the money's going to, this decoupling process, money's going to rotate from one place to the other. Okay.
Yep.
So, buy breakouts, actively manage your portfolio. Crypto is very emotional, right? In other words, if you don't know anything about crypto, you don't know anything about charts, buy $100 worth of Bitcoin and just sit there, and your brain will start learning why it's moving, just as if you pay general attention. You watch a YouTube channel, whatever. You have to get involved, and you have to get involved like an investor, right? You have to get involved like, okay, I'm going to buy quality, then I'm going to sit and think about it. Then I'm going to learn how to get into more speculative stuff, right? So,
that makes sense.
Your education can also come from losing, right? You make a mistake or people miss a meme coin or whatever, and they get discouraged, and the next thing you know, they're rage quitting, right? If you think like an investor and you can buy breakouts, you're probably going to do pretty good, because this is the beginning. This is the beginning, right? I mean, the thing consolidated for 8 months. The bull market started a year ago, and most of that we spent in a range that was frankly horrible.
For sure.
So if you actually did stick around, make sure you stick around and reward yourself. And I think on the self-help front, and I got to do this all the time, man. So please don't think that I get this. I'm going to Tony Robbins tomorrow. You got to think like abundance. You got to think, you know what? There's something out there for me. There's enough for everybody.
Yep.
Right. I'm going to make it. Now, I know we have WAGMI in, crypto, like we're all going to make it. You know what? That's not the worst thing in the world. You don't say we're all going to make it in the middle of an FTX debacle.
Right.
But now is the time where you say, we're really all going to make it. And it doesn't get any better than this. I mean, you're living history in many ways.
Yep. I want to get your take on this, because this is something that I've been debating with my fellow community members for a while now. So in all past cycles, they've been largely driven and dominated by retail investors, and there's been kind of mania, euphoria, whatever you want to call it, like in the past few cycles. Do you think retail will also come back in a similar manner this time around?
Oh, yeah, sure, man. Yeah. I mean, Coinbase is listing all the big memes as we speak, so hedge funds can distribute it all to retail. I mean, look, here's why retail's going to come back. People don't say very nice things about Gen Z. I mean, what's Gen Z been through, right? Their parents probably got divorced. Their brother couldn't get a job because he was a millennial. a lot of those people are not excited about life. They're not excited about America, right? So if you give them something to be excited, if you give somebody who hasn't been excited for 20 years something to be excited about, they're going to go bonkers. And be like, oh, wow, outside the system, oh, crypto. Even if it's a penguin coin or whatever. Man, right. Oh, wow, I'm excited. So, yeah, dude, retail is coming back. As a matter of fact, I'm going to be honest with you, retail has to come back, right? It's like, look, we got to make babies. That's it. I mean, if you listen to Elon, you look at the statistics from Japan and China and us, like, no one's making babies. Mm-hmm. And I know Elon and the next administration gets this. So they want the crypto bros out of the basement, put down the video games, buy some crypto, get some decent clothes, ask a person you love out for Chinese food, watch an 80s movie, and make babies. And buy a house and get a car. So, yes, retail is coming back, and it's always assumed that retail is stupid. I mean, retail in equities is a little stupid, but then again, these guys who just hodled, these guys who just never got out, they just bought it. Every time it went down, they would buy more, and they just did that for 30 years. They're set, right? So, right. Yeah, retail's going to come back. You're going to have excess. You know, they're going to pay, I don't know, $6 for whiff, whatever, right? Retail needs to be back for the wealth effect. They're going to encourage retail. They're going to say Americans can trade on any exchange in the whole world. Where do you see that move, right?
Yeah.
Wait to see what happens to Total 3 when that happens. They want the crypto bros out of their basement. Like, if you look at the election, like, there are a lot of people, let's just be honest, there's a lot of women who are not happy about what's transpired. Right? So, young men, Jordan Peterson style, they're going to have to get their act together. They're going to have to go out and present themselves as like, hey, if you're with me, I can take care of you. I can take care of the babies you currently don't want to have. But when you're with me, you'll want to have a baby. Like, that's 250K Bitcoin. Like, we got to get going. and that's how they're going to look at it, because when the Fed printed post-2008, I mean, that's how they kept the economy going. Right? The stock market went up. People felt good. They bought houses. They got leveraged. That's how we got whatever economy we got today.
Right.
The wealth effect. So, yeah, retail's coming back. They better come back.
I hope so, because it's going to be great for our channels and whatnot, for viewership.
Right. Yeah, I can't wait.
So, like, in prior cycles, there was always something within crypto that was really the kind of biggest boom for retail. Like, it was ICOs and then NFTs last cycle. Are you thinking that it's going to be meme coins this cycle? That, like, it brings most of the retail craziness, per se?
I actually think it's gaming.
Okay.
I think gaming is going to onboard Gen Z. I mean, the Solana phone will eventually be the Solana phone and Solana Game Boy.
Interesting.
I've seen something BitBoy.games. I want it. Some sort of handheld that does DPIN, passive income. There's not enough hardware for AI, man. They got to give kids, I want one, right? Some kind of game that they can play that, play to earn doesn't really work, but if it's like DPIN and passive income, like, people are going to be interested in that. You'll be onboarding people with, gaming assets that are available on chain. Like, if you're going to use AI to create gaming assets, that's got to be verified on chain. That's going to be a huge theme under the surface. But, Gen Z and young people are going to come to crypto. A lot of it could be through gaming.
Interesting.
Right? And a lot of it could come through also, NFTs wound up, like it was a bunch of crypto bros had a $600,000 NFT. They could go to a special bar. They could wear Bored Ape clothes. It was cool. Then it was cringe. Maybe the NFT renaissance will become like, I don't know, become like a cool club for kids. You know what I'm saying? Like, people will want to join communities around an NFT, and an NFT, instead of going to $600,000, people will just identify with, oh, I like this club, or I like this game, or I like this art. And I don't know, I'll own the NFT, and then I'll be in a Discord, and they'll have crypto lessons. something like that, right? Kids will like NFTs as a flex. I also think NFTs are going to come back as fine art, but it's probably going to be gaming, and then dude, it's these ETFs, right? I mean, if ETFs, if I have said that the quest for any researcher is to identify the Magnificent Seven, right? Like in 2010, it wasn't obvious who the Magnificent Seven was unless you were Stan Druckenmiller, right? Now, if you can identify the Magnificent Seven in crypto and just get on board and ride, that's the wealth effect, man. And if it ever becomes obvious what the Magnificent Seven are, dude, they're all going to be in ETFs, and then every single normie gets involved.
For sure. All right, Bill, it's been a fascinating conversation with you. I know the audience is going to love listening to everything you shared here. I want to end with just giving you an opportunity to shout out your own stuff or any final parting thoughts or words. Feel free to say whatever you want.
All right, I appreciate that. So first of all, don't ever get discouraged. Don't ever let them shake you out. Don't ever let anybody talk you out of doing crypto, right? It's like, it doesn't get any better than this. Take it from me. And no matter what's going on in your life, you can improve it using crypto. Now, my YouTube handle is @CryptoNoble, right? All one word, Noble. We have YouTube memberships where me and my partner Toby have podcast portfolios, basically all the research you need. I have Patreon as well. You can check all that out on my Twitter. It's @crypto_noble. So basically, I'm trying to do what my last two bosses wanted to do, which is create real crypto research that people can consume. It's like an investment bank, except it's a guy in a nice shirt and a woman. It's a guy and a girl talking about crypto. So that's what I hope to do. I want to make it real, make it genuine, make it united. LFG.
Sounds good. I'll be sure to leave links in the description. And once
Appreciate
again,
that.
thank you so much.
Thanks, man.